These numbers now with Dawn Desjardins. She's chief economist at Deloitte Canada. Thank you so much, as always, for coming in. What do you think of what you've heard so far?
Well, I think it was to be expected in the sense that we are seeing a slowing in terms of employment gains because the economy is slowing. So I think it's all very reasonable. The fact that we saw this slowing in job gains and still robust population growth, I mean, it does yield that increase in the unemployment rate. And I think we saw some indications that wage growth is also decelerating slightly. So, these are all sort of what we would expect to happen in a period of weakening economic activity.
And let me see if we have a wage growth number here in Canada. We do. Wage growth moderated to 5.0%. It was expected to come in at 5.2% growth, and it was 5.3% in September. So that's a big part of this release. How do you think that looks to the Bank of Canada? Wage growth moderating to 5.0%.
Well, it's certainly one of the things they've been very anxious to see. When they look at all their different metrics, they're looking at inflation expectations easing. Well, we haven't exactly seen that. I mean, it's eased, but not to where they want it to be. These wage numbers, again, not where they want it to be, but directionally, I think it does, suit the Bank of Canada very well in terms of indicating that the labor market, which has been really unexpectedly robust, is finally showing, real signs of slowing.
And do you think that the amount of, full-time hours that we've seen decreasing over the past few months, do you think that's masking what would be like a higher unemployment rate? If you look at, let's just say, today's numbers, you're seeing, less disappointing in full-time work versus part-time, and then the reduction of full-time hours. Do you think that's masking what we're seeing as more weakness than we should be seeing in the employment numbers?
I wouldn't say that necessarily, no. I mean, I think these numbers bounce around month to month, as we all know. And so sometimes we have these big pick up in the part-time component, sometimes it's the full-time component. But I think by and large, we are in a period of really sluggish economic activity. So we have to expect that companies are looking at their order books and saying, maybe don't need quite as many hours from my workers as I would if we were in a robust economy. So, I think we're seeing the fraying, and this is something we've been looking for on a consistent basis, right? That these interest rate bites would, in fact, slow the consumer, slow business hiring. And, the run rate definitely has been on a downward trajectory for several months now. But I think this just kind of solidifies that view that, yes, we are in a period where economic activity is slowing. And from the bank's perspective, a sense that as these demand pressures ease, we should see some pressure on prices also ease.
What's your view on the Bank of Canada? The overnight swaps market says the Bank of Canada's finished now raising rates and will cut rates in June of next year. What's your view?
Yeah, that's pretty much aligned with our view. We have thought for a while that the bank would top out at 5. And we do think that conditions will be such that we have this slower economy, that we will see in sight the 2% inflation. It's not going to be hitting, we don't think, in 2024, but it'll be in sight, and that should be sufficient for the Bank of Canada really to ease off on the brake a little bit.
Okay, I want to tell viewers and my two guests on set the U.S. numbers as well. 150,000 U.S. jobs were added to that economy during the month of October. That's 30,000 fewer jobs than expected. The consensus was 180. It's also a huge step down from the 336,000 jobs that were added in the month of September. In fact, that figure has been revised down now to a little less than 300,000. The rate of unemployment rises in the U.S. to 3.9%. That's more than expected. The expectation was 3.8%. And average hourly earnings rose at a pace of 4.1% in the U.S. That is that's more than expected, but it is a retreat from the September number, which now stands at 4.3%. Your thoughts there?
I think obviously the U.S. economy is performing much more strongly than most people would have anticipated. We saw, third quarter growth was really off the charts when you think about it, and driven by the consumer, which you would have thought in a higher rate environment might not be exactly the case. And so, yes, a slowing in the jobs market, I think, really, it's sensible. It's what you would expect to be happening in an interest rate environment where they have been moved up so significantly over a relatively short period of time.
Okay, what's your outlook on the Canadian dollar? Let's finish there. It's now trading at about its lowest level so far this year, at just below 73 cents US.
Yeah, I mean, we thought it would be a little firmer. To be honest. But certainly when we look at all the factors that are weighing into the currency, the fact that, the U.S. dollar does seem to retain its status as the big currency, even though we know lots of deficit issues are arising in the U.S. And we had expected perhaps a little more support from the oil story, but that didn't materialize either. So, it's a little weaker than we would have thought.